Yeah, good morning, everyone. So, US market more of a range bound in Friday trade, whereas futures are more of a marginally negative, and even Asian markets are indicating some negative trend in today's market. But on the other hand, commodities are showing pretty strong trend. Though oil is up by around $1 today morning, and aluminum is more of a flattish, but copper is up by around 2%, iron ore is up by around 4.5%, and steel is up by around 2.5%. Some positive data from the China are taking up the steel and the iron ore prices up, indicating that there could be some strong demand in the busy season of September for the steel. Overall seems more of a sideway market in today's trade. Nothing so great, except Friday RBI came up with the policy meeting during the market hour. They had increased the interest rate by 0.5% versus expectation of 0.35%. The higher interest rate increase doesn't has much impact, because the inflation target for Q4 remains same, indicating that the RBI is taking a step to increase interest rate faster than expectation of market. And overall interest rate increase will not be higher than what the market was expected, as the inflation target was not increased for the fourth quarter. And even in first quarter of FY24, the inflation target is 5%, which indicate that the interest rate increase will be limited from here. So, so nothing negative from RBI meeting also. It's more of indicating that the whatever the RBI was lagging in interest rate is now in line with what the inflation are, and the cycle of the interest rate increase. I'll request technical team to take up from here.
Yeah, thank you. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, and we are likely to witness a sideways momentum during the day. On the technical front, Nifty is facing a very strong resistance of 17,470 levels. If we witness any positive momentum above that level, then upside can be expected towards 17,530 to 17,600 levels on the higher side. On the flip side, 17,340, 17,270 will act as a strong support levels. Coming towards the bank Nifty, the immediate resistance is placed at 38,170 levels. Any move about level, we believe that this positive pullback rally is likely to be continued towards 38,340 to 38,640. Whereas on higher side, lower side, 37,780, 37,600 are the crucial supports levels to watch. Coming towards the Nifty Finance for today intraday purpose, 17,340, 17,430 are the important resistance levels. On the flip side, 17,200 and 17,140 are the crucial support levels for the Nifty Finance. Coming towards the stock specific, Sterlite Tech really looks very good on the technical front. It's just well placed above the important moving average, and it has just given the breakout of the trend line. One can take a long position into Sterlite for a target of a 168 rupees to 170 levels, and stop loss can be kept at 145 levels. That's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. On the derivative front, open interest is at same levels. PCR is around 1 weeks, continues to remain high. 17,000 put has the highest open interest, and 17,500 call has the highest open interest for Nifty. From the stock specific front, ICICI, Prudential, JK Cement, PEL saw increase in open interest with increase in price. So long built up seen there. While we have given some calls which are open on Ibul Housing, Ambuja Cement, NMDC, Ramco Cement. These calls look good, so look out for the same. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. State Bank of India result was broadly in line, or we can say marginally below expectation, because the net slippage is increased from 0.4% in March to 1.4% in June. But this is seasonally a weak quarter, and we have seen this trend in most of the large banks. Net NPA was stable at 1%. Also, advances have continuously been increasing. They were at 16% growth year on year and 3% quarter on quarter. And the retail advances grew by 19%, corporate by 11%. So the trends are continuing, and on the loan growth front, they are accelerating. So we remain positive. Also, management has said that they are confident of maintaining 15% plus kind of loan growth for the full year also. Acrisil result was okay. This is the first quarter of consolidation of the newly acquired UK company Silmar Technology, and hence the combined financials are not comparable on year and quarter on quarter. However, post the presentation which has come, the like-to-like basis, if we see, the revenue was flattish quarter on quarter, and management had indicated that there was some indication of softening in demand on the back of inventory destocking, and they have indicated that quarter two will also be flattish. But for the full year, they remain positive, and once this inventory thing is behind, they are of the view that growth will again pick up on a sequential basis. And if also the last quarter they had given a guidance of 150 crore EBITDA for FY23, and going by quarter one result, they are on track to achieving that number. So the stock might be, we are neutral in the short term, but long term we remain positive. Computer age management services, which is CAMS, result has declined in line with fall in asset management industry. Revenue declined 3% sequentially. However, EBITDA declined 13%. So we are neutral here. Rolex Rings result was okay. Revenue was flat sequentially. Q1 again here being a bit soft because of exposure to industrial segment as well. However, year-on-year growth was 26%. Margin was stable at 22%. We expect full year revenue growth of 25% and profit growth of around 40%, and remain positive from long-term perspective. Minda Corporation result was in line with expectation. Revenue grew 7% quarter on quarter and 80% year on year. EBITDA margin was stable at 10.6%. Company is a good proxy play on two-wheeler industry, and now also with CV industry doing well, the mix of CV is also increasing, and overall we are positive for Minda Corp. 197 Communications or Paytm result continued to remain weak. However, losses have been reducing sequentially for 3 quarters now, and revenue grew 9% sequentially, 90% year on year. And as I said, EBITDA losses have been reducing. So one should keep watch that whether this trend continues, then our view can change. As of now, it is neutral. Thank you.
Good morning, everyone. FLA has posted its result yesterday, and the company has posted above expectation numbers both on the revenue and the margin front. Revenue grew by 10.3% Q on Q, and EBITDA margin came in at 19.7% versus expectation of 18.4%. Stock is trading at a PE of 41.5 times FY24 EPS. Zensa Technologies has posted in line with expectation set of numbers for the quarter. Dollar revenue came in at $155 million versus expectation of a similar number. In line with other IT companies, operating margins of this company has declined and came in at 11.3% versus expectation of 12.2%. Stock is trading at a PE of 10.9 times FY23 EPS. 24 EPS. The call of the same would be held today, wherein the further details will be shared. C Infosystem has posted improved set of numbers for the quarter. Revenue grew by 14% Q on Q and revenue came at 65 crore. Higher revenue led to higher profitability to the company. Stock is trading at 106.7 times TTM EPS. Thank you.
Good morning. Mahindra and Mahindra announced its results. The result is marginally below expectation. Revenue came in at 19,623 crores versus an expectation of 19,926 crore, which grew by 15% sequentially and 67% on a YOY basis. EBITDA margin came in at 11.9% versus an expectation of 12.4%. In the farm equipment segment, the company reported stellar volume in domestic as well as export markets. The management has guided for a 3 to 5% growth in farm segment over FY22 levels and a CAGR of 7 to 8% over the next 7 to 8 years. Going forward, M&M expects margins to improve in the second quarter of FY23, led by softening commodity cost inflation. The company took price hikes of around 1.5 to 2% in the first quarter. The management highlighted that commodity costs have cooled off from the highs witnessed post the start of the geopolitical tensions in Europe. The stock is trading at a PE of 19.7 times FY24 EPS. Thank you.
Yeah, apart from this, Titan came up with the number during the market hour on Titan came up with the number during the market hour on Friday, and our result was ahead of expectations. But in that, we know that company announces their revenue figures well in advance, just post the end of the quarter. But the margin picture was also better. They had reported 13% EBITDA margin versus expectation of 12.4%. So yeah, result was better, and management has indicated that their long-term guidance of 20% CAGR growth they are holding up, and will continue to grow in that perspective. The point is that the stock is trading at somewhere around 58 times FY24 earning, which is if we go pre-COVID level, then that was the higher end of the valuations. Though during the COVID period, the valuations moved up very sharply to around 70 times as well. But what we see that now that scenario is not there, and valuations will get restricted to somewhere these levels. So outlook is positive, but near-term upside is limited because of the valuation. So any corrections can be used to buy this stock. Similarly, Aditya Birla Fashions, again a retail company, has reported very good numbers, well ahead of expectations. Revenue grew by around 258% year on year on the lower base, and well ahead of expectations also. And also EBITDA margin also came up ahead of expectation at around 17.1% versus expectation of 15.4%. Here again, the stock is trading at a comparatively higher valuation at around 58 times FY24 earnings. Then NMDC reported poor set of number. Here the EBITDA per ton declined quarter on quarter. EBITDA per ton came in at around 2436 versus quarter on quarter 2185 and year on year 4420. So there was a decline in EBITDA per ton, but overall that was expected, and it's a commodity stock, so it is the valuation is the result is well factored into the prices much before that. Today iron ore prices are a bit positive, so market may not take this result as a negative. Then Kirloskar Ferrous came up with very good numbers. Result has shown a good improvement. Revenue grew by around 6% quarter on quarter, and EBITDA margin also had shown a positive trend quarter on quarter to 14.5% versus last quarter 12.4%. So overall seems positive results from Kirloskar Ferrous, but what we see that high coking coal prices are likely to have some impact in Q2. as the high cost coking coal continue to be used in the July month. Thereafter, they will start getting lower prices coking coal. So quite possible the Q2 result may be flattish as compared to Q1, and thereafter the results can start improving the trend. Overall outlook for Kirloskar Ferrous seems positive from here. Then HPCL and BPCL both have declared results, and results were below expectation. They had reported loss at EBITDA level, mainly on account of the retail margin, which got impacted substantially in this quarter, whereas GRM was positive and shown positive trend, but the retail margin was substantially lower, and the EBITDA loss was around 12,500. Whereas the expectation was 4,700 crore for BPCL. So result was bad, and similar was the case with even BPCL as well. IRB Infra has reported good number. Here the revenue and EBITDA both and EBITDA margin all came ahead of expectation. The EBITDA margin was 55% versus expectation of 44%. And similar is the case with revenue. Revenue also came up higher than expected at 1,900 versus expectation of 1,600. So IRB Infra reported good numbers. Then CCL management has indicated a positive trend as they expect a higher volume growth for the current year as against expectations in the last con call. Earlier, they were expecting around 15% volume growth, which is now they are expecting anywhere between 20 to 25% volume growth in the current year. And even in the current quarter, that is Q1 FY23, the volume growth was 25%. So overall seems positive for CCL product. Outlook is positive from here. And I'll request commodity team to take up from here.
Thank you, sir. Good morning, everyone. Today we expect metal prices to rise. Copper can be bought at 655-54 levels with a stop loss below 648. Prices again are expected to test 662-65 levels. Similarly, aluminum also looks good, though it is in a range of 213 to 208, but buying on dips is recommended. Crude oil prices are looking for a bounce back. So prices are settling around 7,000 mark, and we expect prices to bounce back till we can see a 200 to 300 points rally. So buying on dips is recommended with a stop loss below 7030. NG prices are expected to correct 620, 615 levels are expected. It is weak below 637, 640 levels. So if a bounce back comes till 35, 37, one can sell with a stop loss of 42, 43. And it can be bought around 610 with the stop loss below 602 for a pullback. Silver looks positive. Silver buying is recommended at 57,000. Prices are holding 57,000 on closing basis, so it can be bought with a stop loss below 56400. 58,000 could be the possible target upon upside. Gold is consolidation between 52,000 to 51,600. So it could be in a range. So buying on dips is recommended. And that's it from me. Ria can take over from here.
Thank you, sir. Good morning, everyone. So on the currency front, Reserve Bank of India on Friday decided to raise the policy repo rate by 50 basis point to 5.4%. It was against the market expectations where the prognosis was of RBI going softer this MPC meet with 25 bips to 35 bips. Now the RBI Governor Shaktikan Das stated the reason behind the move that the inflation has remained above the tolerance level of 6% and the risk of it remaining above the same and doing something before it shoots up again. He further added that calculative steps will be needed in order to quell the inflationary pressure, get the inflation within the tolerance level, and also to anchor the inflationary expectations. The RBI retained its inflation and GDP growth projection for the current fiscal year ending in March 23 at 6.7%. The SDF rate stands adjusted to 5.15% and the MSF rate and bank rate is at 5.6%. Now, the keynote to take away from this current MPC meet is that the RBI did mention that the CAD, that is current account deficit, this time in his speech, saying that it is under manageable levels, but still indicates that the widening of CAD is providing some heat as it got mentioned into the RBI speech. RBI did promise to do whatever it takes to ensure a safe and soft landing for the economy and maintaining enough liquidity in the system so as to not to put a dent into the gradual recovery of the economy. On the Indian rupee front, the central bank has stated that they are using forex reserve to buoy the volatility in the Indian rupee. Further, forex reserve have risen marginally by 2.31 billion dollars to 573.87 billion after seeing a decline for almost few weeks now. This has happened with the recent capital flows happening and also with the Indian rupee appreciating. The current risk to the appreciating Indian rupee is that if the US inflation sticks above 9%, Fed could continue with its aggressive stand. So far, Fed has done rate hikes, but on removing the liquidity front, they have only done $10 billion against the promise of $150 billion in the past 3 months. So if an aggressive stand is taken on that front, we could see liquidity going out of the market quite soon. Dollar index will continue to remain on a stronghold position, taking into consideration the global turmoil that is happening around the globe. If Taiwan situation escalates, it will again put pressure on the US-China relation, arising the risk of supply chain disruption, going for a worse than risk of supply. Arising the risk of supply chain disruptions going for a worse turn, which means that the price pressure will continue, and this could further elevate the inflationary pressures as well. So I think going forward, you can the broader forecast for the Indian rupee is expected to depreciate towards 80.80 levels, 81.50 levels. For the intraday, it has opened on on the higher highs around 59.52 levels. 79.35 will be a crucial support for the Indian rupee in today's sessions. One can go long into the Indian rupee above the level of 79.62 for a target of 79.80, 79.98 by keeping the SL of 79.45. That's it on the currency side. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.